Hey everybody, this is Jose Blasco. How are you, everyone? We're about to start in 30 seconds. Can I have a quick sound check, a quick hello message on the chat box we do, just to confirm that technology is on our side and we are ready to begin with no interruption this time, like we had last week. I do expect today to be smooth. So quick confirmation that would be very, very, very nice. Very nice. I will turn on the video stream while I'm waiting for a confirmation. How are you? I can say hello from the bottom right corner of the screen. Here we go. We just reached the starting time of the session. So we are now live, and therefore my pleasure to get the session introduced. Welcome everybody. Options with options, isn't it? Trade with UFOs. My name is Jose Blasco. You can see my email address. Today it's December 10, 2020. Welcome to the session. And the plan, as the name of the session suggests, is to focus on trading options. Options, as the name suggests, gives you options. In this sense, we're going to be looking at opportunities to be directional, to be non-directional, etc., etc. We always look for and target setting up a portfolio with multiple trades running in parallel, where some trades act as a hedge of other trades in order to create consistency in the results in those portfolios. Okay, so we're going to be working on that. I will highlight the disclaimer for you, so that way you guys can read it carefully. This is important information, so please read it carefully, don't skip it. And this is important stuff. Obviously, there is money involved in trading, and therefore there is financial risk, and it's important that you're aware of all the intricacies related to financial regulation. Good. Gary, how are you? Yeah, well, COVID-19 is limiting a lot of the traveling, so I don't think that would be possible for me to be physically present, but online technology will allow me to be present, virtually speaking. So I will certainly be connected with you guys on that day, but not in person. Very good, but very kind of you to ask, and certainly excited to join you guys that particular day. In any case, let's begin with our options trading. The session is now officially introduced. And I am now getting into TradeStation. I normally run the sessions in three parts, if you wish. One part where we talk about the S&P and the current market situation, so we get to understand what is it that we have in front of us. From there, we move into reviewing trades that we have running in the portfolio, and we talk about it. So if you happen to be running those trades as well, why not? So you would understand better what are your choices when it comes to trade management. And finally, we would then move into looking for new trading opportunities, which of course that's the most interesting part of the session. Okay, so we're going to be doing that. Before I start, one last comment, very quick as well. As you have seen, if you were in the session last Thursday, around 20-25 minutes during the session, we had the session interrupted. As well, my colleague Boyan on Monday got problems, as well as earlier today, Andrew Han doing the Forex session also got problems. All of this has to do with some changes that have taken place on YouTube and how the streams work. I am glad to say that I believe that my session is going to be fine, since it seems that we have fine-tuned some parameters, and now everything should be back to normal after those changes made by YouTube. I am, let's call it 99% sure of this. Okay, so if anything happens, so then I will apologize in advance, but I'm really positive that today is going to be a normal day, and hopefully into next week all the sessions go back to normal, because this week all the sessions that we have been running ended up being like 20-25 minutes, which is half of the time we normally give you guys to work with us, to ask questions, to practice, to get to understand how trading works. And so we feel terribly sorry about it, but at the same time, it's what happens sometimes when we depend on technology, and obviously we all depend heavily on technology these days. Okay, anyway, so S&P. So let's take a look at what's happening on the S&P. So first of all, this is the S&P ETF, and really what I want to point at is where we are at when it comes to climate. So the climate is thick and blue, so on one hand you would expect the market to continue going higher, but then when we look at statistics, we can see that a normal thing to expect from this climate is to move up during 10 days, and we've been moving up for 12 days already, meaning that price went a bit too far, a bit too fast. Okay, and in this sense, we may be in a situation where there is no possibility or probabilities for sustainability any longer, and the market may have to retrace or change direction all the way before there is a continuation, assuming there will be a continuation. Maybe not. Maybe we're going to have a major downtrend to follow. We'll see. The climate will tell us, right? But the fact is that, when looking at the chart, we can see how red UFOs are now showing up. They were not available just a few days ago. Now they are here. And on top of that, we got the climate telling us, careful, this climate may not be sustainable, even though it is confirmed. Okay, so caution everybody, and make sure we manage greed. Markets have been moving amazingly this year, especially to the upside. I'm talking about equity markets. So certainly there may be a lot of greed built in some of the trades that are working amazingly well, and you may be like, okay, it's going to the moon now. Well, let's be cautious and make sure you have your target. You take profits when it's time to take profits, depending on your plan, your rules, your methodologies. And make sure you do that, especially given the fact that stocks follow the broad markets, and the broad market seems to be in that position I just defined. Okay, so careful out there. Don't be greedy. Don't be hopeful. When it comes to the pricing of the options, it's interesting to see how while the markets are in that up climate, we can see a change here on the VIX. Okay. Where it seems that the price of options are increasing, and they're increasing more than what would be expected, if you wish, given the fact that the market is still in a blue climate. In other words, some fear is kicking in. The current value of the VIX is, let's call it 22, and while this is not super high, is definitely not low. Okay, so option prices are gaining value. Therefore, I would anticipate in our scanners, when we look at directional opportunities, to have a little bit shorter lists than what we had last week. And when it comes to non-directional trades or credit trades in general, I would not expect very long list either. Okay, why? Because again, the options are only trading at 22. Okay, but since the price of since the implied volatility is going up, and we just hit a green UFO, so it may go higher. So we may go back to the 25 area. So with all of this in mind, just again, all of this is pointing at the market potentially correcting. Okay, so everybody be careful if you are in these trades. Trades to be reviewed. Okay, so one of the trades that we have since some time ago is Roku. What we did with Roku, it's we were looking at this trade last Thursday actually, and I remember this is one of the last things that we did. We did move our red line from lower to below this green UFO. Okay, the trade was taken on that particular day. So we purchased that stock. We purchased actually a call when that stock was trading at 227. It's currently trading at 315. So we've made close to $100 times the leverage of the options. This is let's call it the trade of the year. Okay, this is a fantastic trade, really high performance trade. Okay, but again, because that stock was making all times high, we didn't have a way to set stops. So what we are doing is using the UFOs to keep trailing price. If you look at what happened today, okay, so if I was to look at 1209, which was yesterday, so notice that there was a green UFO there right the market started. So really, the right location for our alert to get out of this trade would be 297. Okay, so 297 should be our real location, right? So if we look at today, which is 1210, okay, so what happened? 1210, the price went into the UFO and is bouncing up back again, okay, following that climate. But careful with that climate, okay, statistics suggest 10 and it's already 20. So this is really an overextended move, very likely to be sustainable. But again, craziness may drive to more craziness, and that's when probabilities break. And you may have another UFO to form and keeps going higher. So we're just gonna keep moving that red line upper and upper. And whenever that red line is hit, that's gonna be our alert to then close the trade manually. You could certainly as well, have an automatic order to do that. But, again, since it's options, you can also do it manually. There is not an urgency to run. This is not intraday trading. It's a bit more relaxed, isn't it? So anyway, very, very, very powerful trade working very well for us. The next one is Tesla, which is also a trade that is working well. So this is a trade that we put in place utilizing December 18 expiration date, and obviously we got 1 week to go, okay, to December 18. We also had another plan which was December 31st, but in both cases, 18 or 31st, okay, that stock has been moving higher. UFOs are available. It is not looking like we're gonna hit 445 before that date, before December expiration, December 18 expiration. Okay, if we were to look at stats, so let me load Option Station Pro. Okay, so just 1 sec here, guys. So Tesla, okay. So 18 and 31st. So if I look at 18, okay, we got 18 and 31st, isn't it? And I look at this in the analysis window. So 31st suggests that price will reach 472. Okay, 472, and 472 is it's somewhere here. Okay, and that is for again using December 31st expiration. So it's working very well. If you were to use December 18, okay, so let me just throw a simulated trade here just for the sake of getting that measurement. Analysis, sell vertical, and I'm gonna go back to the analysis tab and uncheck December 31st. Okay, so I only left checked December 18. So notice that statistics suggest that that market is gonna hit 509. Hitting 509, it's doable based on probabilities. Below 509, it starts, I mean, everything is doable, but below 509, it's unlikely. So definitely reaching 445 is very, very unlikely. Okay. So in this sense, if again, let me remove that simulation, we don't need it any longer. But if you were to look at, what the prices of those options are, the midpoint is still pointing at 25. Unfortunately, they are not super liquid. Especially since price moved away a lot. So those faraway strikes are very likely to end up profitable, but because they are so far away, you get a very big difference between the bid and the ask, and basically we get to see our midpoint being the same as the premium we collected when we took the trade. So really, you cannot really do much here. I mean, you could. Options give you options, right? So you can do many things, but from a normal point of view, if you wish, the right action would be just to stay put, okay? Just wait and wait for time to pass. Actually, sorry guys, this is December 31st. I'm looking at the wrong one. I thought I was looking at December 18. So analyze and sell vertical. Let me bring this one here so we can see. So let me get the right strike. So we are talking about 445. Okay, a bit more, 445 and 442 and a half. Okay, I'm getting there, 442 and a half. Okay, so we don't have it in this one, so it will be 445, 440, I guess. Let me see what I had written. Yeah, 445, 440. That was the December 18 and December 31st, 445, 442 and a half. So again, this option is trading at 16 cents now. Just a little bit more time passing, and that's it. We're gonna be good to go. If you want to close this trade in an anticipated fashion, you should be able to do it. And if not, definitely waiting for that expiration date. It's definitely not a crazy thing to be done, given the fact that we got plenty of UFOs to defend ourselves, and statistics suggest that we should not go lower 508 or 472. So reaching 445, it's very, very unlikely based on those probabilities. Okay, so Roku looking amazing, Tesla looking good. Intel, that was a long-term investment. So let me move this one to a weekly time frame. Okay, because that was a different story. Weekly time frame, not daily. Here we go. So what did we do here? So what we did here was to get into this trade on that particular date, which was right before the U.S. president election. We took advantage of this major rise in volatility, when volatility hit like 38, we did this particular trade where we were selling as two spreads in order to pay for a call. So this is a call that was done for a credit of 60 cents. And again, happy as an investor to accumulate shares of Intel. Is a good stock, good company, they pay dividends, all that stuff. But at the same time, we wanted to participate on the move if the move was to happen. And the move is happening, okay, big time. So if we were to look at Intel, INTC, okay, so just loading Intel here. Okay, come on, come on. Taking a while. Come on, Intel. Okay, so I'm getting an error message here, like a timeout message. I'll try again. I'm not sure why this is happening. Should not be too complicated. Okay, now it worked. Or maybe not. Okay, yes, it did. Okay, so we were selling 2 of the 40 puts, right? And the question is, I mean, this trade is currently paying 216. So in other words, if we did this trade for a credit of 60, and this trade is currently paying 216, so 216 plus 60, that means that this trade is currently paying $276 per contract. This is how much this trade is paying so far, which is nice. But the point, using January 15, which is the expiration date used in this trade, if you look at the 40 put, notice the price of the 40 put, which is trading between 8 to 10 cents. The midpoint is 10 cents. So one action that you could certainly do, and it would fully remove the risk of the trade, and I would see that as a smart approach, would be to close the 40 put. Because if you close the 40 put, you will give up on 10 plus 10, that's 20 cents. Okay, but given the fact that the trade cost you, actually the trade paid you 60, so you give up 20 cents, 10 plus 10 is 20, and therefore you still have a credit of 40. But the beauty is that when you get rid of the 40 puts, now you totally, completely removed the risk of the trade, and you cannot lose anymore. Okay, so certainly that to me would be a very good approach to this trade. And together with that action, so it would be also be very interesting to move into the daily time frames, okay, and do the same thing we are doing to Roku, okay, use this collection of green UFOs, okay, to go ahead, okay, and set, I'm going to use a red line that represents a stop. So if Intel, instead of continuing to the upside, was to crash and hit that price, so get out, and because that will guarantee a profit. Already closing the puts is a profit, which is guaranteed, that removes the risk, and exiting this trade at 47, where the entry was 44.5. So that's going to be another chunk of profitability coming into the account in case Intel does not continue to the upside. Because you heard my comments about what I see in the S&P, with the auto climate being very, very extended at this moment in time. Okay, so again, these are the actions that I am suggesting here as a trade management for the ones of you in these trades. So hopefully you are enjoying the moves. You may be using real capital, paper money. I mean, of course, real capital, it's you would appreciate it more if you wish. But to me, from a coaching point of view and from a guidance point of view, if you wish, so it doesn't matter really if you're using real capital or paper money. I just want to make sure all of you are with me on the process, on what we did and what we are doing now as a trade management action. And if you're not, just feel free to type your questions, okay? Because now I'm going to move into planning new trades. But if you have any remaining question about everything I covered so far, my friends, this is your time, okay? Very nice, very good. So while I'm waiting for you guys to type, okay, I would also want to bring our website to the screen very quickly. A couple of things I would like to share with you guys. So here's our website. Okay, and this is nothing new to you guys, but again, I want to point at the button on the top, live get together, where you can see the calendar of sessions. There is something that not everybody may know, and we've got some emails in recent times, so I would like to point at this. So for example, today we are doing options on the 10th of December. So you may or may not have noticed that if you click, okay, on the blue box, you get another window, and there is a link next to that infinite sign. And for every session is the same. So let's say you want to attend the future session with Pedro next week. So you can click on it, and when you click on that particular link here, this allows you to add the sessions to your own calendar, no matter if it's Outlook or Yahoo, Google, Apple, and that way you don't miss the sessions, as well as you have the direct link to come into the sessions, and again, you have a reminder of the time in your own time zone. Okay, so just keep that in mind if that is needed. And also for all your instructors, in this case I was pointing at Pedro, so let's go with Pedro. So if you use our URL, which is www.tradewithufos.com, but then you add Pedro at the end, so /Pedro, okay, or it could be /Pedro, it could be /Becky, it could be /Andrew, it could be /Reynaldo, any of the instructors, okay? So you get into this page, okay, and if you haven't yet, make sure that you sign up for the Trade with UFO membership. First, it's free, and second, it's a better way for us to communicate, because we send you reminders, we send you direct links to recordings, all sorts of things that are important, and we can be well communicated. If we cancel a lesson or a session, we would let you know as well. Okay, but what I do want to point at, really, it's here, the bottom side of this page, which is a section where you can go ahead and see that a lot of questions and answers are growing. And I would like to welcome you and invite you to type your questions in those pages too. It doesn't matter if you use the Pedro's page, or you use Andrew or Becky or Bert, anyone who is doing the sessions. Go ahead and type your questions here, and also take a peek on some of the prior questions and the answers that are given, because again, this is very educational. Those are normally very, very good questions, very advanced, and by reading the questions and then reading the answers, it would certainly help you very much. Okay, so just make sure that you use all of that, my friends, and you are always aware of what's on the calendar for next day, next week. Okay. Cool. Anyway, so back to trading, we're going to be looking at non-directional trades to start, and therefore I started sorting those 7 stocks by their price. So we're going to start with Adobe, and to be honest, we won't start with Adobe because, as you can see here in the bottom left, earnings are happening on 12/10. And by the way, that's today. So, we don't know what to expect when it comes to a pricing point of view for the options. So we're just going to pass. TFX, that one is a stock with earnings happening on February 18. So that opens the door to plan the trade. Probabilities are 54%. So that is good as well, because we need at least 48% for the non-directional trades. So with all of this, okay, no need to think too much. Let's go ahead and type TFX on the Option Station Pro, so we can go ahead and plan the trade. Okay. Now, first impression about that stock, I'm a bit disappointed. Why? Because we only have monthly expiration dates. We don't have weeklies. And what does that mean? Well, that means that probably we are going to suffer a little bit of lack of liquidity. So let's take a look at December 18. And yes, I'm not trading that stock, guys. $10 to $15. So, just to get in and out, you will lose 50% of the price of the option. So, not liquid enough. And therefore, we're just going to go ahead and continue with the next one, which is SNPS. SNPS. You guys have been very, very quiet, everybody. Very, very quiet. So feel free to comment and ask questions. Don't be shy. I know that this is YouTube, and therefore it's a public environment, and many of you have reported, that you feel a bit shy. Don't be. To be honest, the only people watching our channel are serious people that look at trading seriously, because no one would be watching a 45-minute video on trading unless you are serious about it. So don't be shy. That would be my recommendation. So earnings for Synopsys is 217. We got 47%. That's not good enough. We need 48%. So let's take a look at pre and post market to see if we get a better measurement. And unfortunately, we don't. We had 43%. So Synopsys is not going to be acceptable for us. So we move to DocuSign, which provides 46% there. And if I move to regular session provides 54%, so that's good. Okay, and here it says no data available for DocuSign. In one hand, you would be like, okay, so then I'm blind. I don't know when earnings are going to happen, so I'm not going to take the trade. But the reality is that we could go ahead and activate EPS postings. And by doing so, I would think, let me see, did I activate EPS postings? How come I don't see them? Wow, interesting. So the last time there was an EPS posting, that was a long time ago. That was April. And we've been like 6 months. So it's either the stock stopped reporting or something happened with that stock. But indeed, we are blind when it comes to knowing when the next earnings are going to be. Most of the times when you see no data available for the earnings, it means that the earnings were just reported maybe a week ago, and therefore the next date has not been reported yet. This is what happens many times. But it seems that with DocuSign, really, we have no idea. Okay, so I'm just going to move into the next one, SSD. Okay, for example, here you can see earnings reported here. Okay, so but we didn't get that with that stock. Okay, so EPS postings. Okay, gone. So we got 44% probability. That's not good. What about pre-post market? That's 41. Not good either. What about RDY? Yeah, it's not looking good at the moment with 34%. I mean, we still have pending data, but certainly that's not a good beginning. 34%. Okay, so no good. And if we look at regular session, that becomes 40%, still not good enough. So what about the last one in the list, SMAR? Let's see if we're going to accept this one or not. So we got 56% here, 55%. That is indeed good. Pre and post market is providing us with 41. That is not good. So regular session is the way to go. But now my issue, or what may be an issue, and yes, unfortunately it is that you can see that peak happens to be, I'm looking at a monthly time from now, so that peak happens to be all times high. And if I go back to the 55-minute time frame, notice that all-time high is actually a nice UFO. Thank you very much for that. But the problem is that we only have one. And our rules say that for us to do non-directional trades, we need at least 2 UFOs above and 2 UFOs below. And we only have one. So in other words, the list I have on my screen with those particular 7 stocks is not a list that provides, as of now, opportunities for us to take. So could you go ahead and rerun the scan and maybe some new symbols are going to happen? Well, yeah, and we could do that and see what happens next, okay? But right now, the answer is no. We don't have what we need to take the trade. So we can certainly go ahead and focus on other opportunities, okay? So I like to look at, in a perfect world, opportunities to get short, okay, which is directional down arrow. Why? Because in this portfolio here, everything I got are trades that are pointing to the upside. So I always talk about building portfolios where you have some trades hedging other trades. Of course, in the YouTube channel, we only meet for 45 minutes a week. So it's not like I can build a whole portfolio with 20 trades in parallel in 45 minutes. Obviously, I cannot do that. But again, let's pretend this is everything I got in my portfolio. Well, obviously, I will be in a situation where I'm looking for shorts. So notice how I got none. Okay, I did run my scan and I got none. So those are challenging situations that will happen from time to time, where you would like to find trades of a certain type and the market is not making them available to you. So when that's the case, well, you better respect it, because we don't have the power to change the market. So we have to respect it, okay? We have to respect it. So now, if you cannot find trades which are directional short, maybe we can find trades that are neutral short, okay? So it's not ideal, but maybe it works. So what I want to do is, same story, I'm going to rerun the scan, okay, on the directional shorts to see if something shows up. And in parallel, I'm going to move to my neutral short credit opportunities and see if I can work any of those trades to be an opportunity to offset the other trades I got in case the market was to crash. So at least this trade would make some profit, okay? So good news, we do have 48% or more, so that's good. Earnings are happening on February 25, so that is good. Therefore, let's go ahead and time to look at the option chain to see liquidity and do some math. I'm gonna take a sip of water if you don't mind, guys. Okay, so sorry for that. So I think that you see that in this particular case, bad news and a good news. Okay, the good news is that volatility is unbelievable. We got 78%, 75%. So there's a lot of premium built in those options. Unfortunately, we only have monthly expiration dates. And as I said earlier with another stock, this typically leads to lack of liquidity. And by the way, lack of liquidity typically leads to fake options breaks and therefore crazy values like that. So I'm a bit disappointed, and we may have to invalidate the trade. You know what? No, we don't need to invalidate the trade. Actually, there are thousands of contracts being traded as open interest, and if you look at the spreads, they are actually okay. At least at the money is quite okay. Further away, then I'm not sure, because the problem is that we only have $5 strike price increments. So I'm not sure if in the end we're gonna have a go ahead or not. But initially, I would say it does not look that bad. Okay, so let's go ahead and look at adding. We are doing a bear call spread here, so it's a credit spread pointing to the downside. So I'm just gonna right click anywhere on the call side and analyze and sell a vertical. I will adjust it later. Right now, the only thing I care about is to get my +1 standard deviation and -1 standard deviation above and below. Of course, I only care about the one above because I'm just gonna be doing, this trade to the short side. It's a neutral short, isn't it? It's not a non-directional trade. It's not an iron condor. And in this sense, we can see that one standard deviation is, let's call it 66. Okay, so if I go to the chart and I draw a line where 66 is, okay, so 66 is more or less here. Okay, more or less there. And if I make this to be a dotted line, so, and then remember, we are looking for two UFOs above in this case. So this is UFO number 1, UFO number 2. This is UFO number 3. Okay, which one? That one is beyond 66. So that's good. Also, I didn't check pre and post market. So pre and post market, it's not providing enough probabilities. It's only 42%. Therefore, we're going to discard it. Okay, but certainly happy to work with 49.68. Our minimum is 48, so that's good. So what do we conclude? Well, the options to be sold would be above 68. And because the strike price increments are $5 at a time, if I'm not mistaken, yeah. So we don't have 68, but we will need to use 70. Okay, now what's the problem with 70? Well, the problem with 70 is that we would only get paid 30 cents. Okay, we would only get 30 cents for this trade, and that is not enough. We have a rule that says minimum 35. So we're gonna have to pass on that expiration date, okay, on that June 18. That one we need to pass, but it doesn't mean we need to pass on the trade. We can go ahead and give it a try with the next one, which is January 15. Now, of course, the further away you go, especially when you deal with stocks that are not so liquid, is that you lose even more liquidity. So I'm not sure how it's going to look like if we use January 15, but it still look more or less okay. It still look more or less okay. So we can see still thousands of contracts in open interest and hundreds of volume, so way better than what I thought. And therefore, let's go ahead and change in our analysis tab 18th of December, and let's make it 15th of January. So we get this value recalculated as 74 instead of 66. So 74 is there. And therefore, for us to do this trade, we will need to be selling options above this UFO, which is basically 80. So let's take a look at how much we get paid for the 80 call. If we do the 80 call, how much we get paid, and notice that we get paid 88 cents, which 88 cents is indeed more than 35. So that is acceptable. Okay, that is acceptable. Now, that doesn't mean I'm going to accept the whole trade. No. And to be honest, I won't accept it. And you will see why very quickly here. So I'm going to go to the analysis tab. We said we're going to do 80. Therefore, we're going to buy 85 against. So we're going to do 80, 85. Okay, 80, 85. And if I do 80, 85, well, notice that the net premium to be collected, if I do this trade at the midpoint, is going to be $25. Okay, but the risk of the trade is 500. Right? So what is our rule there? Well, our rule is that we take the difference between the strikes, which we call that the raw risk, and we multiply this times 15%, and this is the amount of premium that we want to collect to accept the trade. So we would accept this trade if we were to get paid $75, but this trade only pays us 25. So how come we get paid so little? Well, we get paid so little because the fact that stock is less liquid has an impact which cascades as we go out of the money, and the further the strikes, the more the problem. If we were to do it, using nearer strikes, notice that if I use 60 and 65, so the difference between 480 and 315, let's do the math. So 480 minus 315, it's actually $1.65. So it's way more than 75 cents. But of course, you will now be selling options around 60, where our chart and the UFOs tells us that for this trade to be high probability, we need to use 80. And 80, unfortunately, does not pay enough. Okay? So, be disappointing, but that's what it is. Now, I'm not going to give up just yet. I want to do another try with no, I'm not gonna do it. February is all the way to 71 days. That's way too long for a neutral trade. Okay, so yeah, that's it. So no trade with this guy. And let me go back to our non-directional trades, and well, we got plenty of new symbols there. So we are back to non-directional trades. Make sure I don't drive you crazy. We are looking at iron condors. Okay, iron condors, and let's begin with Costco. So let's see what Costco provides for us. So earnings in March, okay, so that's good. Probability 52%, that's great. Pre and post market is 42%, that's not good. Regular session is good, but anyway, even though it's good, we're not going to do it, because the problem is that if I look at two UFOs above and I look at two UFOs below, well, notice that the current price is way nearer than the top than what is it to the bottom. So in a perfect world, I want that stock to be somewhere in the middle, okay, in the middle between the two UFOs above and the two UFOs below, and it's not the case. Okay, so I'm going to move to Lulu, and let's see what happens with Lulu. Lulu reporting earnings today, so we're going to pass. IFF. Reporting earnings on the February 10, that's good. We got 48% there, so 51%. Actually, that's nice. What about pre and post market? 43, that's not good. So now, again, that stock is not a stock that I know as a very liquid stock. So let's check the option chain and see if we're gonna give it a try or we're gonna pass based on liquidity parameters. Again, another stock where, this makes me wonder if, I do have all selected, monthlies, weeklies, and quarterlies. So I'm not sure why, today all the stocks I'm finding are stocks that only have monthly expiration dates. And notice I'm not going to trade that stock, $2.90 to $36, really major, lack of liquidity. So FSLY, let's see what probabilities are going to be first. Okay. So pending data. So we are waiting for this to show up. So we got 47.9, that's not good. And if we move to pre and post market, that becomes 46, which is also not good. So let's look at knee with 39%, no good. Regular session, 53%, that is very good. Earnings January 22nd, that is very good. So let's go ahead and check the option chain. Again, another stock that doesn't have weekly expiration date. Wow, I'm quite surprised that all my stocks today are like that. Okay, but anyway, so let's go ahead and analyze and sell an iron condor. Let's get probability metrics on the screen. So if we were to do this trade, we'd be dealing with 77 and 70. So 77 and 70. 77 is somewhere there. So that's good. And 70 is somewhere here. So that's good. So in other words, if we were to do a trade utilizing the top of this UFO and we were to do a trade utilizing the bottom of that UFO, so that would be valid. So we'd be dealing with 70 and 77.5. So let's take a look at 77.5 and see how much we get paid for that. So 77.5 is only paying 18 cents. And unfortunately, this discards the trade because remember, the minimum we accept is 35. So yeah, disappointing premium on knee in the end, even though we almost got there. So Oracle, let me see if we are a bit luckier here because so far today it's a no day, and Oracle is going to be another no day because earnings are happening today. So not a good one for today. Maybe tomorrow, but not today. Well, probably it is good, but earnings being so close is not advisable. So did we find any opportunity to go short? Maybe. Okay, when I rerun the scanner, notice that I got new symbols that showed up. So let's go ahead and start with CNC and see if we're gonna have any trade to be planned. And this is a good beginning. We got 50% probability. Actually, we do have a trade here that will be valid. So be ready, my friends. This time we have a yes. So we have 52%, we have 50%, sorry, with the pre-market is 40. So we'll leave that alone. We'll leave it as, we will take this trade as regular session data. And if I was to look at auto climate, so we have a confirmed climate to the downside. This is the first candle of what statistic we suggest is going to be 4 days for this market going down. 4 days with a reference entry price of 63.74, which coincides nicely with that particular UFO ending at 64. Okay, so I'm just gonna get the whole area here, starting at 63.40. Sorry, so starting at 63.40, CNC. So we're gonna do a bear spread here, guys. Be ready, and this time we do have weeklies. Okay, so that's good. So the entry price for this trade, it's going to be 63.40. That's going to be the entry price. The target price for this trade, we'll find that in the daily time frame. So let's turn on auto UFO, and we can see that there is room for price to reach 56.84, which is the top of the UFO. So 56.84, that would be the location for our target. Okay, and therefore the way the trade is to be built, and I'm gonna have to rush a little bit, guys, because we got in theory 2 minutes left. So you can always rewatch this in the recording if I go too fast. But the way we're gonna do this trade is by buying. Okay, so we're gonna buy a put above, and then we're gonna sell a put below. Okay, so the put that we're gonna sell needs to be beyond target. Okay, and the put that we're gonna buy needs to be between entry and target. Okay, that's where it needs to be. So because our entry is going to be 63 something, and when I look at the option chain, let's take a look at this. I'm just going to pick 15 of January expiration date. Then I'll rectify maybe, but it seems that most of the strikes are $2.5 at a time. So it would seem logical to me to begin the plan using the 62 and a half. Okay, 62 and a half. That could be a good starting point for the trade. But again, before I get there, I also need to calculate my time to target. So if 63 and a half, 63.4 is going to be my entry, right? Okay, 63.4 is going to be my entry, and my target is going to be 56.84. So that means that I am shooting for a $6.5 move. So based on probabilities, okay, $6.5, okay, would be achieved with that expiration date that is supposed to provide, in a one standard deviation of the cases, $7.2 move. So in other words, I'm going to use January 15, but I also want to be aware of the earnings date to take advantage of potential increase of value of the options as earnings approach. And notice that this is February 2nd. So what does that mean? Well, it means that while January 15 is giving me 7.2 days, which is more than what I need, it seems that utilizing February something would be a better choice. But there is no February something. It does not exist yet. And therefore, I'm just going to make the trade more expensive if I use any other date, since there is no option to get the February expiration here. And if I get 99, basically it's three times more time, and I'm going to make the trade way more expensive. Not three times more expensive, but way more expensive. Therefore, we're going to go for 62 and a half, okay? And then I'm going to start with, let's call it 55, okay? So if we do 62 and a half, analyze and buy a vertical, and I buy the 62 and a half and I sell the 55, so we're going to see what happens if I do this trade, okay? So sell the 55. Okay, and this, by the way, it's utilizing Jan 15, 2021 expiration date. Okay, so this is the trade that we are planning on doing. We wait for the stock to come back to the red UFO. The moment it gets to the red UFO, we're gonna buy the 62 and a half put and sell the 65 put to create a spread, and hopefully be right in direction, ride the move, and profit from the move. That's the idea. If not, the most we will lose is what we pay for the options. Okay, so let's understand this trade better. Let's understand this trade better. So first of all, the entry price is right here, 63.4. So how much delta I get at my entry? I get 30, which is exactly what I want, negative 30, because it's a trade that makes money on the way down. So therefore the delta is negative, but we want the absolute value of delta to be 30, and that's perfect. Okay. What else do we want? We want gamma to be positive, which that's going to be a given, but we want gamma to remain negative all the way to when we reach the target. And notice that when we reach the target, gamma will be negative instead of positive. So can we try to fix that? Yes, we can. What if I move this to 52 and a half? Well, now gamma is positive all the way to target, and this basically only increase my delta to 34, which is just a little minor change, which is going to make my trade just a bit more expensive. This trade is going to cost theoretically $218. So the risk of the trade is 218. You pay 218. The most you can lose is 218. Okay. Notice if I go back to 55, the trade is 204. So basically, I'm making the trade to be just a bit more expensive. But thanks to being just a bit more expensive, I do benefit from positive gamma all the way until my target, which is going to enhance the performance of this particular trade. So I'm happy with this. Okay, I am happy with this, and therefore this is a plan that we are going to validate now. I'm just going to have all the parameters and place the order so you can see how I do it in case you want to replicate that yourself, and we will call it a day. Okay. So here is the day in which we plan the trade. Here is our entry price, which we said it's going to be 63.4, isn't it? Yeah, 63.4 is our entry. So we'll see if price comes here or not. And knowing that I'm going to use 62.5 and 52.5 puts that expire in January 15, and I have it here, 62.5, 52.5. So it's now time to place an order. I'm going to use one contract. Every contract carries a risk of around $220, more or less. This is theoretical, okay? So always give yourself a bit more wiggle room. So I'm just going to go market here out of the simulation I'm doing for you guys. And I would use an activation rule. They only, if I don't get filled today, I can always review it tomorrow. And the price of CNC, we will want that stock to be trading at 63.4 or above. Okay, remember, this is our entry price. So I'm making an activation rule, the entry price. So if the entry price is met, then activate this trade. Okay, and this trade is going to be to buy the spread. So I'm just going to place the order, get some validation here. I'm going to say yes. And now the order is in the system there, waiting to get filled. The CNC spread trade is right there. Anyway, so I am aware that the planning of the trade was quite fast. For the ones of you that do spreads on a regular basis, maybe I was slow. For the ones of you learning options, I'm pretty sure it was a bit fast. You can always go ahead and watch the recording. We do need to conclude the session now. Actually, I surpassed the time by 6 minutes, so I'll say bye now. I want to thank you for joining me as always. If you have any question, remember to use our website. You can certainly also email us for sure. And just be engaged, be interactive. Don't stay isolated if you have trading problems. Ask for help. We're happy to help. We have the tools and we have the team. So count on us. We're certainly committed to your success, my friends. So keep up the good work and we will see you in the next one. Take care, everybody. Bye-bye.